Hey, welcome back to the Hub channel. My name is Brandon. We have another Delta Neutral breakout show for you right now with Jeff Beamer. Obviously on the show today, we're going to be going over the Delta Neutral past trades, what we went and what we did this last week. We're going to be going over the top headlines in the market, the U.S. market update and what's going on over there, as well as what we see coming up here in the market. Let's go ahead and bring Jeff in here. If you don't know Jeff, he is a professional money manager and senior strategist over at Ewo Trader. Jeff, this last week, obviously the S&P breaking to new all-time highs. We just had our Super Bowl. Are you a Swiftie? Are you a Swiftie?
No. But I am outside of my. I love Kansas City because that is the first sports team of any type of sports team, of any sport that I, as a little kid, affiliated with because I had a lot of family in Kansas City. And we never got to see the games unless we went there to visit in the fall. And now they're on TV all the time. And believe it or not, Pat Mahomes is from my wife's hometown. And so she has followed him since, junior high. And then being a tech boy, and we have two kids at Tech. So, at Texas Tech. So, we were pulling for Kansas City last night, and what a game it was. So little football hangover today.
That's great. I am up $22 on my family bets. I feel bad taking money off my in-laws, but it is what it is. And we're yeah, exactly. Dollar bet here, dollar bet there. We went big. Last week we traded. It was at Gilead, right? How did that trade turn out?
Yeah. Gilead moved. What happens with market makers is they set pricing based upon expectations, and the stock moved. Believe it or not, the stock moved its estimated move, which is a little bit unusual. And when it does this, we can pretty much either break even, take a little profit, or take a little loss in the trade. So for us, this was pretty much a break even trade as it tested that bottom break even. That's that light blue line that you see going horizontally down there. You see on Friday, the price crossed that. And so we were looking at taking the trade off there for pretty much break even. And that's, how it goes sometimes. These stocks will move their estimated move. But Gilead historically moves more than that. And we're going to see that in a trade a little later in the show today. But so I'm not disappointed with that. It's just part of the cycle, and we're on to the next trade.
Yeah, any break even's better than a loss. I mean, to have that work out the way that it did, I don't think that's too bad at all.
No.
I know that you'd mentioned a little bit, we were talking before the show about the Fed, what they're talking about. Do you want to dive into that and tell me why that's important? Kind of move past as we kind of get into more earnings and things like that. What's going on there?
Oh, we had quite a few murmurs coming out of the Fed today. And, interesting that they all kind of were singing the same tune. Okay. First of all, we had Adriana Kugler, who is a Fed Reserve governor, state that Wednesday, or that inflation is showing signs of slowing down, but she's not ready to start voting to lower interest rates yet. Okay. That's pretty interesting. And then the Minneapolis Fed president, Neil Kashkari, who I've talked about quite a bit, he pretty much affirms that, it's good to be cautionary right now. And he expects maybe 2 or 3 reductions this year. And the reason I like that, I like that because it kind of goes with what my thinking has been and what my feelings have been, is for those that were looking for cuts to start here in the spring, I just think that's a dream. I think it'll be May as the earliest, maybe over the summer, about 25 basis points. And I really would take the under on this and say 2 cuts for this year. But the data is still going to keep coming in. And then Suzanne Collins, who's the Boston Fed president, says she just needs to see more evidence before considering adjusting the policy stance. So all of this is really going down the path of higher for longer and keeping rates elevated, and cuts will come when they come, if they come. I'm still thinking the risk here is of rate hikes. Now, that's not coming out of the Fed. That's just coming out of, well, experience in the markets and seeing where we are with bonds and interest rates and inflation. Even though they say it's tamed, we're not really seeing that in the real numbers. There's the government numbers, and then there's the real numbers. Okay, so anyway, yeah, lots of news there from the Fed, and that's been kind of a buzz for the day. The market reacted to it early, Brandon, and now we're beginning to sell off a little bit.
Yeah, and I don't know if it frustrates me that you mentioned that there's two different sets of numbers. Obviously, we have reality where we live, and then we have the government numbers that they want to basically try to paint a different picture with. And it's frustrating to see the dichotomy in those numbers, because I think we should use a set of affordability standards, basically. How affordable are things right now? And then I don't know if you saw this from the White House yesterday. Biden came out and released a message about shrinkflation, about how he's worried he's not getting as much ice cream as he used to get. And these are the things that our White House is worried about. And we've been obviously looking and watching shrinkflation forever, and seen our cereal boxes get smaller and smaller as we're paying the same price or higher. So I don't know what's going to happen here coming up. So we'll just see how this plays out. Market.
Yeah.
Let's market. Oh, go.
Let's jump on the market. No, we got lots to talk about here. We have lots going on, and really the headline that you talked about, as we take a look at the chart here, is the S&P 500 reached 5,000. In fact, closed above it for the first time ever. The SPDR SPY closed at 501.20 last Friday. And, we kind of saw this coming. I had a forecast of 485 on the SPDR by December, which we blew through. And then the next target is 500. When you reach that level, up there around 85 or 90, even if it's a stock, like a stock's trading at 80 and it creeps up to like 86 or so, and it's never seen $100 before, it's going to $100. And in this case, that big round number of 500 on the SPDR or 5,000 on the S&P, that was the target, and we're there. Now what happens? Now we have to recalculate and recalibrate and figure out how much further up, or are we going to retrace? I think that's the big number there. And as far as retracing goes, I use Heikin-Ashi candles to kind of confirm our trend. And you can see here that these candles, notice that there's no wick on the bottom. Okay, this is a solid bullish trend. So with that kind of information, all you really need to do is just take any tool of your choice and just kind of draw a line in the sand and say, hey, there's no reversal. There's no fear of reversal until we cross that line that you've drawn. And right now, there's no bear in sight, Brandon. There's no bear in sight.
Easiest. Yeah, the way you put that up there and the way the Heikin-Ashi kind of plays out, obviously it looks like there's no bear in sight, but the markets can't go up forever, and especially with what we see happening. But so far, you would be a contrarian in the market, and your dollar bills playing out if you would have believed that case. So I guess maybe they can't go up forever. Who knows?
Well, they will go until the pain threshold reach its beyond its peak, and then then only then will it change. So and the spies aren't alone. If we jump over to the NASDAQ, and I'll start with just regular candles here, and that's the Qs. All right, we see pretty much the same thing. Okay, this is very similar. All right, there's the regular candles, and then we'll do Heikin-Ashi, and once again, we just have those soldiers just marching higher here. Nothing is kind of concerning. Now, today we have sold off a little bit. What that will do is shrink the bodies. And then if we have another day like this tomorrow, we'll probably get what I call a wicky red candle. And what I mean by that is similar to this day right here, like on Friday, January 26th, where you see this red candle, and then there's a wick on the top and the bottom. Okay. That usually indicates the potential for a trend. You see back here on Friday, December 29th, this red candle had wicks on the tops and the bottoms. And then all of a sudden we sold off a little bit. So that's not in play right now, but it's something to watch out for. And as we go through here, the Russell, small caps were kind of a leading indicator down. And you can see that I was set up to actually, and I did not put this trade on. I was waiting for confirmation. And boy, I'm glad I didn't. I was looking for a bearish trade to the downside, but we have had a sharp rebound. And now these December 27th highs back here, that we are targeting that, which is up around 205. And we could hit that obviously we could hit that this week. And then where we go from there is really, the small caps kind of beat to their own specific drummer. But man, with the spider pretty much break even for the day, the NASDAQ down 33 basis points, yet small caps are up almost 2%. This is pretty much typical of what happens with small caps. They just, they're just a different animal there. So, that's kind of our broad market update for the U.S. And so now, I want to talk a little bit about oil a little bit. If we go over to USO, which is something that we like to trade quite a bit, you can see here that we're stuck in this range. Okay. So yes, there's some weekly volatility up and down, but really nothing to get excited about until we break above about that $73 mark. Otherwise, this is a sideways trade for crude. There's a lot of news coming out about lack of demand, yet are there going to be cutbacks in supply? And that news cycle will always be there and always in play. So at some point we will break out of this. But for right now, Brandon, oil's just trading sideways, and we'll possibly see some movement as we get a little closer to summer, possibly.
Yeah, I wonder if that's not going to be the case. I think does this not just happen every year as we get closer to summer, same type of thing? So I think we'll see kind of more of a movement, and this might be more of a tradable play here coming into summer. You'd mentioned the bonds are pretty exciting, and I mean, I guess we could talk maybe gold and silver too to see where they're at, because I think those ETFs are getting left in the dark when we're talking about Bitcoin. So I don't even talk about those anymore with my friends. So
let's talk gold and silver first, real quick. Because the best way to look at gold is how much. The old adage is it only represents the average cost of a custom-made suit. So right now it would be around $1,800, and if you go price out the average custom-made suit, guess what? It's between $1,800 and $2,000. I mean, it is. It is just kind of that inflation hedge, and you can see that it rallied pretty hard going into the end of the year. Now it's been chopping sideways, and we're trading down near some support here. And really, if we break support and break this line here, and I get confirmation, it really is an interesting play, because there is a pivot point right here, obviously, and then another pivot point down here. And so there's places of areas of support on the way down that I don't anticipate a big drop for gold, but it could happen. But for right now, gold's just chopping sideways. And if we start to rally off this, I'll probably put on a trade up around 190, but I think it's a little too early for that for right now. And then silver, bouncing off of support right now. This red line you see zooming up from the bottom here, that's a long-term trend line that I have in play. And I always like to keep those on, okay, because they do come into play later. All right. So if we continue to chop sideways, and then if I extend this line out and up, okay, I wouldn't be surprised if at some point right around early May, we might get a big reaction out of silver. All right, and I don't know about silver could rally, but I think it's testing going downward, and I would watch out for that May cycle there on silver. It's at some good support. But let's get to the bonds, because believe it or not, that's where some of the excitement is right now. I mean, who knew bonds could
No,
be?
you got me, but you got me on the edge of my seat here. The bonds are exciting. Okay, tell me. Go ahead. How?
Well, as fast
How? Go. No,
as
go.
we're looking, okay.
I'm
As,
excited.
okay, okay. Let's look at the chart here, Brandon. We rallied hard in bonds, which sent rates plummeting 2 weeks ago, and then we V reversed. I mean, just fell out of bed. Rates jumped back higher. This type of volatility is very unusual for bonds. I find this area at $93 or $94 very interesting, because if we do break down below here, we could see rates continuing to climb higher. Now, this is important because of the government, and the latest 10-year auction actually went really well, but the U.S. is refinancing huge amounts of debt at much higher interest rates. And that, my friends, is a recipe for disaster. So here, this is the long end of the curve on TLT. This is the 20-year Treasury bond ETF. And then we have the short end of the curve, which is 1 to 3 year Treasuries. And, we're kind of doing the same thing. We're hanging around some support here. Interestingly enough, if I this might be a good, let's see if we do get an Elliott wave count. Okay, so this is what's interesting to me is this is a case for rates to decline, because we're in what we call a qualified Elliott wave 4 or a type 1 buy situation. And essentially, we have retraced down to 36% of this move here. And really, we haven't gotten the signal yet, but the signal would be to go higher. Now, that is going to be very interesting, that we have a technical setup here that is opposite of what feels like could and should be happening, where interest rates continue to climb and get a little bit higher. But otherwise, if SHY continues to drop, then what that will do is help flatten that yield curve. So speaking of that curve, let's I like showing that weekly just to kind of keep track of it. But the spread between the 3-month and the 10-year Treasury bonds is still over 100 basis points, and it's at 1.27 right now. That's 127 basis points, meaning you can get a 3-month bond at a much higher rate than a 10-year. So why would you lock your money up for 10 years? Which is interesting that the 10-year auction went so well. But this is indicative of underlying problems. We have been inverted. Next week, I'll show how long we've been inverted, but it's been over a year and a half now that we have stayed inverted, and that is just not healthy for financial markets. Not healthy, period. We've been seeing interest rates on credit cards go up officially now above 21%, which is pretty amazing that people just here our credit card debt is at historic highs, and people just keep racking up those bills. But that's kind of what we're faced with, and that's why, Brandon, we focus on the bonds, because quite frankly, our interest rates aren't dependent on cryptos.
Well, that's too bad. The debasement of the dollar would tell otherwise. Anyway, so let's go ahead. Let's talk a little bit about you said mortgage rates and stuff. Obviously, they're starting to move a little bit as well. But the bond setup that you did show actually looked like a play might be coming in, might be worth talking about here coming up, Jeff. That looked like a
Sure.
really good trend line that we're following there. So Anything you want to hit on the mortgage rates there? What's
Yeah,
happening there?
mortgage
What do you
rates
see
look
happening
good.
towards the end of the year?
They've eased off a little bit. They're trading late. The last print was 6.96 for the national average. Again, they're higher in some places, lower in others. All right. But the national average right now is at 6.96%. And I think the more time goes by, then people will just learn to that we are here higher for longer. If you're waiting to sell your home, before you get back down to 3% interest rates, you're probably not going to be around by the time we get back down there. I just don't know that we're going to get back down to 3%. I could be wrong. Okay. But that's just not historically where we stay. We're now getting back up to kind of historical norms. We're on the very low end of historical norms. So it's I think these higher interest rates for mortgages, you're going to have to sacrifice either the size of the home or come up with more cash for your monthly payment or for a down payment. I mean, that's just the fact of life. So right now, so it doesn't mean. And what's interesting is home values are anticipated to increase at a very nice rate. So now, if you're waiting, you're almost in a lose-lose situation if you don't act. So I think sitting and waiting is not a good recipe in the for mortgages or housing. But
Yeah, I mean, I don't think. I mean, I couldn't agree with you more. I don't think we're going to see 3% ever again. I just don't think that's going to be. You're right on that. That's just never going to happen. So act now. This is the same thing that we tell everybody that we work with. Is, you know what? If you wait too long, you're going to just wait yourself out of an opportunity, and that might be the case here with the housing market as well.
yeah,
Um,
yeah.
we still have some earnings coming up on the table. What are you looking at as far as earnings goes?
We don't have some earnings. We have almost 700 earnings coming up. In fact, the list is long, and this image is just of the notable um, earnings or most anticipated earnings coming up this week. This is not all comprehensive of all 700, but I found it interesting that Waste Management will have earnings after the market closed today. You know, we just had the Phoenix Open, which is the Waste Management Open tournament in Scottsdale, Arizona. So they declare after market close today, and then tomorrow we do have inflation and core CPI in the morning, and then also with Shopify and Coca-Cola, Marriott, we do have some big names declaring. Lyft and Instacart, Zillow, Airbnb, and after market close tomorrow. But then the rest of the week is just filled with not only earnings, but in the morning before market open and then after market close, that really Valentine's Day almost gets buried in this with all the economic data and all the earnings that's coming out. So don't forget your sweetheart on Valentine's Day if you're into that. All right. I think every day is Valentine's Day in my household. So, it's just another day for me.
Hold on, I'm writing this down because I don't want to. That's this week, Valentine's Day. Okay, thank you for that, Jeff. I think that's a good reminder. I would have been toast. I honestly had no clue what month we were. Anyway, so we're talking earnings
Now, I'm
coming
not going to
up.
tell you what day then. You got to figure out what
I,
day.
I know. I'm gonna go math that. It's like February 18th. Okay, we'll get this. Don't worry. So what we got coming up? Earnings. That's okay. That's playable. Now, trade of the week, Jeff. What are you looking at? I want to get into that right now.
Yeah, trade of the week, we're watching Generac Holdings. This is a stock that historically has done very well for our strategy. And right now, the market is pricing in around a 10% move on Generac. But historically, it has moved over 40% through earnings. Now we're 6-1, meaning 6 wins, 1 loser in our past 7 earnings cycles on Generac, so it can have a quiet earnings. Okay, but this is a company that really provides they're a generator company. They make generators that hook up to your natural gas for your home, and then when the power goes out, you can just it just fires up and is powered off natural gas. and they have had their moments. I mean, they especially after hurricane season, either before or after, it's often a big play around hurricane season because people learn to, to adjust, and they put these things on their homes after losing power for 2 weeks. Okay. I live in Tornado Alley, so, kind of the same thing here. It's a very popular product to accessorize your home with. But we'll see. Right now, we'll see how it performs here later this week for Generac. So that's about a $1,300 trade, $1,400 trade for the Strangle, and we're looking for it to break out and be a good performer for us. So
That's interesting. I mean, I looked at these Generac generators actually for my house. This is something that I've looked into, and I think as people see the potential for more of a black swan event, like a COVID situation, these sales will go through the roof. So this, I mean, obviously this trade could play out a lot quicker than that, but I think this is a very interesting company to watch. I love this field. Where can people find out more about your trading style?
Well, we have a free guide that's available through ewotrader.com/straddle. And you can see how we trade straddles and strangles around these earnings events. These are good strategies to put on for the right stock, not just any stock. Stocks that have demonstrated historical movement and a history of consistency with that movement. And so if you'd like to learn how we trade around earnings, then you can download our free guide once again at ewotrader.com/straddle, and we'll get that right out to you.
Thanks so much, Jeff. Can't wait to catch up with you next week to see how this Generac trade plays out, as well as maybe the bonds. I kind of want to see where that trend line goes as far as that is as well. That looks like that might be a thing that bounces off that thing. So, and one of these days, we're going to get you into the cryptos and we're going to get you educated on this stuff and why it's important for you to learn more about crypto. This is going to be great, Jeff. One of these days, one of these days. Anyway, thank you all for watching the show. I hope you enjoyed it. But next week, we'll be back here for more information about the markets, what's happening, as well as a quick trade review and more trades for you guys to look at in your own portfolio. We'll see you in the next one. Take care.